year is under the, I would say, fiscal sustainability and debt management. And the government is projected to run a slight fiscal surplus this year and a primary surplus of about 6%. And the primary surplus falls in subsequent years. The economy is also projected to have declined, forecasted to have declined for the first calendar quarter in 21. And growth for the calendar year is estimated at about 1.5, I would say, to 2%. And then for the fiscal, I would say probably less than 6%. Given this backdrop, Minister, just want to ask you, should there have been a different fiscal stance given the goal of recovering from COVID quickly?
All right, thank you for that question, Adrian. Jamaica, so far, we've weathered this storm well because we have had the courage to make disciplined policy choices. And as I've been saying, the path out of this is pretty clear, but that discipline needs to be maintained. The first sort of thing to recognize, right, is that, we have been so accustomed to the level of indebtedness that we have that we don't really realize how high it is and what the risk involved in it is, right? All right, let me back up. We suspended our fiscal rules last year for us, and we amended those fiscal rules to push out the date by which we need to hit our target, and also to flatten the correction mechanism. If we didn't flatten the correction mechanism, we'd have an even bigger task this year. So instead of correcting over 2 years, we correct over 4. If we weren't to go with the budget parameters that we had this year, it would mean that we would have to suspend our fiscal rules for a second year. There's no two ways. There's no in between. You can't just choose a primary balance unless your fiscal rules are suspended. Now, one thing that we need to be cognizant of is where we are as a country. Right? And that's why it's very important to be able to make policy from first principles and not just borrow from here, look at what this guy is doing, look at what that guy is doing, but understand our circumstances and devise policies to suit our circumstances. Now, a part of our circumstance is that Jamaica, even when we were at 94% prior to this crisis, I don't know if we fully recognize that we remained in the top handful most indebted countries in the Western Hemisphere. So if you look at the IMF's World Economic Outlook published last year, in Latin America and the Caribbean, there are 35 countries mentioned. And at 94% that we celebrated reducing by 50%. We excluding the United States, which is an aberration. We were the 3rd most indebted country out of 35. And the other 2 who were ahead of us were a part of the island states of the Caribbean. Okay, we have been so far out of mainstream for such a long time, in this hot water that we don't realize how hot the water is anymore. The simple fact, Adrian, is that the riskiness that we find ourselves in, and I could spend entire 30 minutes on this question, and if I try to do it quickly, I'll do an injustice. But let us say that this is something that we considered very carefully. And given where we are and the riskiness, the risks and uncertainties that we face, and those uncertainties include, natural disaster uncertainties, commodity price uncertainties, how the global environment is going to change, what's going to happen to US dollar interest rates. We cannot afford to be caught out when things begin to change in a time frame that is very uncertain. So riskiness of our where Jamaica finds itself is a very important criteria. As I said in my budget presentation, my closing budget presentation, a hurricane can affect Miami, but it's not going to derail the United States. Alumina price movements may shut down a plant in Louisiana, but it's not going to cripple the United States economy. Any one of a number of factors can send Jamaica south. And we are at the event horizon of a very big black hole, and we cannot afford to cross that event horizon. We have to get away from it quickly. In addition, there is going to be an emerging market debt crisis in a few years. The writing is on the wall for anyone who wants to see. In fact, it's already started. It started in our region. Suriname, which had debt lower than ours going into this crisis, had their debt explode due to factors that we can discuss at another time. And they went from a 4% inflation in December of 2019 to over 40% in August of 2020. Suriname was doing much better than Jamaica, much lower debt, much higher growth rates, but they miscalculated badly. Where we are, ladies and gentlemen, is such that we cannot afford to be mixed up with the group of countries that are going to find themselves in crisis. And many of them are going to have debt levels that are similar to ours. When investors look at all the countries with these debt levels that are going into crisis, Jamaica must be a bold differentiator, right? Must be boldly differentiated from this peer group of countries, or else we'll be lumped in just like them. And we'll find ourselves in very difficult waters. So we're making very determined steps that differentiate us from the pack and in ways that secure our future. Now, let me just go to the other side of that equation, which is that the literature is extremely, what's the word I want to use? The literature is very clear on the fact that for developing economies that have a certain degree of openness, consumption does not, the fiscal multiplier of consumption expenditure is negligible. And in fact, can be negative if the openness is beyond a particular level. Let me just unpack that a little bit. The openness of an economy says something about how much of economic output is related to external input. In the United States, by way of comparison, their trade as a percentage of GDP is about 20%. For us, trade in visible and invisible as a percentage of GDP is about 80%. There are papers that we can share and distribute among your members, where there are long-run empirical studies over decades looking at a number of developing countries and the measure of openness that they have. You boost consumption expenditure, and what you have with an open economy is that you have a spillover. And that consumption, if the openness is beyond 60%, is what the literature suggests, can actually undermine your fiscal multiplier and export the expansion. Because what ends up happening is that you just import either finished goods or intermediate goods from abroad. And we have seen that in our economic history. I don't know if you recall, during the period 09, 10 and 11, we had massive boosts to consumption in the form of huge wage increases. Judges got a 50% wage increase, public sector workers got 16 and 17 and 18%. Much more money in their pockets. Well, we know what happened over that period. So both empirically and theoretically, we know that for an economy that has a degree of openness that we have, consumption expenditure, and in fact has a negative. This multiplier from social expenditure is negative because it has
seem to be having some connectivity.
It's not sustainable. Oh no.
Yes, or continue, Minister. Just finish up that last.
So this is not sustainable.
Yes.
And what you have is that you have private investment being affected.
Yes.
Expenditure that would be accretive would be capital-based expenditure. The challenge with capital-based expenditure, where we find ourselves, is that the ability to turn on a dime with a public investment program is very, very difficult. The public investment program we have this year of $52 is only $8 billion off of our high when you adjust for the PATH program. The highest capex we've ever had in our history was 1920 at $60 billion adjusted for the PATH program, which is now on the recurrent side. So at 52 billion, we are close enough to the
Minister, that's an important point, and apologies for butting in, which I want to pick up in a
No,
few.
Adrian, I want to finish this point. So we are doing now in public investment is very limited, i.e. the ability to design, to prove, to procure and new public investment programs within the fiscal capacity simply as a factual matter does not exist. So what you do is that you'd budget for it, but you would not be able to execute. So when you put all of that together, Adrian, that accounts for the envelope that we've gone with.
Right. Thanks, Minister. Very, very comprehensive. But let me ask you though, right? The one important variable in the equation and what we're trying to do is to generate faster growth. So while the fiscal stance, and you've given a very credible response, right? If you look at what the rating agencies say, for example, that slow growth is a material risk or downside risk to our rating. So, Minister, it seems therefore like the private sector will have to play a greater role in generating faster growth. And I would just like to hear your views on what are some of the things that you are planning to do to get a greater involvement of the private sector or public-private partnerships going.
All right. So, what the rating agencies actually said was that what they've actually implied is if that growth falls below where we're expecting it and below that historical average, I mean, if growth is not above our historical averages coming out of this crisis, then yes, the rating will be affected. But let's be clear on something. Just again, using publications internationally, when I was trying, I could pull up and share here, right? The fund's sort of growth projections for Latin America for the calendar year 2021. And you'll see that they group them into tourism dependent, commodity dependent and other categories. And for the tourism dependent countries, the average calendar year growth is exactly what is forecasted for Jamaica for the calendar year, which includes, of course, the January to March quarter, which has a very sharp, we expect a very sharp contraction. Now, with respect to your question, yes, the model that we have to pursue is one of private sector led growth, which is why, with the stance that the fiscal is taking, you see that monetary policy has been extremely accommodative, and from the words of the central bank, as long as conditions remain, the accommodative stance is expected to continue, and that sets the stage for private sector led investment, and we're seeing a lot of that investment in certain segments of the economy, and there's all signs that that is set to continue. We're going to have to complement that by quickly bringing to the market public-private partnerships and maybe one or two privatizations that can absorb private capital. And the opportunities abound. In all ministries, there's a lot of expenditure that is going to have to be financed with private sector capital through the PPP modality. There is, in the Ministry of Health, you've heard the Minister of Health speak about the oncology and the nephrology centers of excellence. That's a PPP that is under design, as well as other things in the Ministry of Health. And then, of course, PPPs potentially on road and highway infrastructure and in other areas as well.
Okay.
And of course, a critical part is not just at that high-end PPP, and high-end private sector, but what will be critical is to unleash the productive capacity of small and medium-sized businesses which is why we're focusing on some of the microeconomic issues such as access to finance and financial inclusion. The launch of the digital currency should yield a revolution as far as financial inclusion is concerned for SMEs and others in that space. And so, you know, it's a barbell or a twin strategy of ensuring that we can accommodate or certainly catalyze, incentivize large-scale investment, but at the same time unleash the productive capacity of MSMEs through the policies. And we don't have enough time to talk about all of those policies, but the policies such as providing resources that MSMEs can use to digitize their businesses, as well as we have one private equity fund focused on MSMEs that's about to be launched.
Yes.
$50 million capitalization, and the funding is being provided in this budget for 2 more private equity funds focused on MSMEs, maybe a different modality slightly, but in the end we'll have, and I know you're on the board of the DBJ, Adrian, and thank you for your service there. We expect with the funds that we're providing in the budget for this year, we'll end up with 3 equity funds focused exclusively on MSMEs, which by any comparison to our history would certainly be a massive game changer.
Yeah, thank you for that, Minister. Minister, you touched on 2 important issues relating to capacity. One, the capacity of the government bureaucracy to execute multiple large-scale projects in close proximity of each other. And another important capacity constraint, the absorptive capacity of the Jamaican economy, right? In other words, you spoke about the multiplier being diminished because of the openness of our current account. So this is a perennial issue for Jamaica, Minister. I would just like to hear, certainly as it relates to the government bureaucracy, right? What is being done to materially transform our bureaucracy, and in a short period of time, because at the end of the day, we are a poor country that is in need of greater levels of growth. So what are some of the things that you can say to the members and Jamaica in general about boosting the capacity of government to, as you said, to not even turn on a dime, but to get a lot through in a short period of time?
Yeah, so that is a very tough nut to crack. At the most fundamental level, the public sector does not have at sufficient levels or in sufficient numbers the mix of skills and experience that are required to put complex projects together. And a part that is explained by a long period of stagnancy in our economy, where it wouldn't have even made sense to put large numbers of complex projects together because the economy wouldn't be able to absorb it. And it's also related to the fact that compensation in the public sector is low and is pretty much capped. We have therefore been dependent on external advisors and external agencies to help us in the design and the launch of some of these complex projects. We have a public sector compensation review. This is a medium-term objective where I'm hoping that we will be able to muster up the maturity to address this. It's a difficult problem to address because of the politics of labor, right? In the politics of labor, and I don't mean the Jamaica Labour Party.
Labour Party, oh, okay, you clarified.
The politics of labor, the numbers are at the lower levels of compensation. That's where the votes are, okay? So what we have done over decades is to move in lockstep and to sacrifice the potential efficiency and technocratic capability of the government by constraining artificially where the middle and the top can go so that everybody can go together. No, that what we have, the political challenge is to explain to people how their own self-interest is met by ensuring that there are sufficient numbers of capable people who can design the sewage project. And I don't mean design it engineering or mechanically, but design it financially and legally. Because it's going to mean that their sewage will be dealt with earlier, or their waste disposal is going to improve because we have just a whole lot of technocratically able people. So that is what we need to solve. If we don't solve it, then we are constrained to do what we've done in the past of processing these things sequentially and doing, 2 every 5 years or 3 every 5 years, because we can, we only have the bandwidth to deal with things at that level. The second range of things, though, have to do with processes, very bureaucratic processes of having one enterprise team for every single project, and having to go between Ministry of Finance, AG, Cabinet, Ministry of Finance, AG, Cabinet, merry-go-round that sometimes just absorbs time, and we're going to have to improve how we do things. So that's in summary. We're going to need the technical capability with the experience, and we're going to need to improve our processes to ensure that we can bring multiples of these kinds of projects at the same time, or at least bring larger ones and get them done quicker, more quickly. The average time, from conception to finalization is at least 5 years, based on, history up until now. And in some cases longer, 8 years, 6 years, 7 years, crazy numbers. And we need to see if we can compress that. We have to compress that dramatically and see if we can get a few of those out over the next 2 to 3 years.
Thank you, Minister. All right, so I want to, and I'm watching the clock, and I just want to cover as many topical issues in your presentation as possible. So I want to jump to the area of taxation, right? And Minister, in your budget speech, you spoke about modernizing Jamaica's tax system, right? For example, upgrading the Large Scale and Pioneer Industry Act. And I just want for you to talk to us a little bit about some of the opportunities that you're seeing there and, in other areas of tax reform. What are some of the big opportunities that you're seeing for tax reform in Jamaica?
Right, so that's a wide open area. The first comment I'll make on it is making changes that make the government more efficient. We have a system today where corporate income tax is due on March 15th. Which means that the bulk of corporate income tax we get in the last 2 weeks of the financial year, when the warrants have already been sort of signed and drawn up, and you don't know what the inflows are going to be with any real degree of certainty. And that leaves the government exposed. And if you're serious about hitting your targets, what it means is that you can leave things on the table, so to speak, because you're unsure. In addition, we have GCT. On the other hand, if the date were not March 15th, but were some other date, April 30th or some other date, then we would have the bulk of those tax revenues early in the fiscal year, and we would know for sure what our program looks like. And there's no country in the world, there's no mature country in the world, certainly that I've surveyed, that has it the way we have it. Okay, not the United States, not Canada, not Britain, not Australia, not New Zealand, having their corporate tax date due 2 weeks before the end of the fiscal year. That's an example of just not designing policy from the ground up. As a factual matter, as far as behavioral economics is concerned, the vast majority of entities will pay that obligation close to March 15th. That is just, and that's not, they'll pay it close to that due date. So it makes no sense having that due date 2 years before the financial year. In addition, GCT is due at the end of the month. This is a harder one to solve, and it was not in my budget speech, so I don't propose in tackling it right away because it has It would have massive cash flow implications for companies, but it's one that we must tackle eventually. GCT is our largest tax type, and we have GCT at the end of each month. That's when it's due. So on the last day of the financial year, that's when the vast amount of tax revenues come in. I'll give you the experience this year. On March 30th, I was like very concerned. When you looked at all historical averages, all historical norms, etc., it seemed as if we were going to be $18 billion, $18 billion, or some big, sorry, 18 billion is what came in on the last day. But it looked as if we were going to be about 15, a big number, 10 billion, whatever, some big number off our target. Up to March 30th, it just did not look as if things were going to come in based on all historical norms and averages. On the 31st of March, we got about $18 billion on the very last day of the month from these very small number of tax types. And I will unpack this in more detail later. Here I'm just giving it anecdotally. And I went as far, if you go back and look at my tweets, on the 30th of March, I was so concerned, I made it public. And I said, look, it looks as if, we could have an issue here, okay? Because when you look from March 1st to March 30th, and we have all this data, we have it for the last 5 years, have it for the last 10 years, we can track it, interpolate, do all those things, make adjustments for COVID, etc. When you put everything in, okay, it appeared, up until March 30th, it appeared as if we were gonna miss that target, that revenue target, okay, and miss it by a good number. March 31st, and again, COVID introduces all kind of weird things, a barrage sort of came in that allowed us to not only meet, but exceed. Now, that's not the way a mature democracy runs its affairs, okay? With that degree of uncertainty and that degree of insecurity, where huge numbers that you can't, and the numbers, of course, huge numbers always come in on your last day, but in relation to the total, that's what I'm talking about. In relation to your totals. But on the private sector side, what we have in mind is to introduce a large scale and pioneer act. I can't forget the exact name. It was introduced in 2014, but it was not operationalized. The regulations were not put in place. And as written, it's not practical. It was kind of a placeholder to meet a structural benchmark just to get the thing passed. But it was done in a way that no one can really use it, right? It's not complete, it's not finished, etc. Right. We're going to kind of take that as the kind of foundation and finish it, basically, having the regulations in place and making it practical. And the idea here would be that for large scale investments, billion-dollar investments, US dollars or more, that have a certain job content and that can be said to be pioneering to some extent, would benefit from some catalytic support from the government. And we hope to get that LIPP to at least advance it during the course of this year. And then
have you given yourself a time frame, Minister? I'm sorry, have you given yourself to time frame?
With these things, I have learned, bringing a law to Parliament is a not only an obstacle course, but it is it's a multiple relay basically. And while it's my bill, I can't. And it requires a lot of steps involving entities outside of my ministry. So it's always difficult to give a hard and fast as to when, we will have it completed. But I hope to have it, I want to have it advanced this fiscal year, and I want to at least have it tabled this fiscal year. But there's a lot of work to do to get to that stage.
Okay, thank you. Minister, 2 quick questions before I jump to take questions from the members on our call here. So you also mentioned the issue of tax advantage jurisdictions, where a number of companies that operate in Jamaica are actually headquartered or have holding companies in these jurisdictions. And you spoke about, or at least hinted, at measures being put in place to facilitate the relocation of these entities. I'd just like to hear your thoughts on what you're thinking here and what can we expect.
Thank you for that question. So the CARICOM tax treaty, which came into effect, I believe in about 2001, in a completely different environment from the environment we have today. And CARICOM is supposed to be a single economic space. So it's quite legitimate that, a certain part of that space sets itself up using the treaty that exists as the most favorable place to be domiciled. That is not inconsistent as compared with other economic spaces. So let's put that out first, right? That, business people, I think, reasonable and rational to make use of their economic space in a way that maximizes their utility function, so to speak. The world has changed, however, and has changed a lot. And our economic space and our arrangements within this economic space are influenced by international changes. And those international changes are, will eventually make the arrangements that we have fairly redundant, and will make them, if we're reading the tea leaves correctly, will necessitate the need for change. We want to be able to act before all of those events. And what I was alluding to is that, we want to put ourselves in a position where those who wish to come back home are able to do so, and that we have efficient means by which that can happen. And there's a group that's been working on some proposals, and I'm looking forward to what comes forth from that. And we're also in dialogue with others as well, just to design and put in place measures that can get more of our companies making the decision to come back home.
Thank you, Minister. So I see Al Edwards has a question there. Al, I'm just going to ask you to type your question. And while you do so, let me just ask the Minister a question. Let me move to the area of balance of payment, Minister. And while members of the audience can send in your question. So, Minister, everyone knows the material impact from the fallout in tourism. And, thank goodness this has been partially mitigated by what we have seen in terms of remittances, a material increase in remittances. So I just want to ask you about the risk management being developed, just in case, as you know, the evolution of the virus is very unpredictable. And, so what kind of risk management, let's say, is being developed, being strategized, just in case the return of tourism is later than we expect?
Right. So, the prudency is the name of the game when you're a vulnerable and highly exposed, undiversified economy like ours that's in transition. And clearly, through this transition, we will be addressing some of these exposures. The reserves that we have in our central bank remain healthy. And, I believe that provides a fair degree of insulation. We do expect to earn more from tourism this year, significantly more than we earned last year. But in addition, I don't know if you've seen where the countries of the world have voted for the IMF to issue
SDRs.
a round of SDRs, which is will have a massive impact around the world, including in Jamaica.
Minister, sorry, you just want to explain quickly just the SDRs for your audience?
Well, SDRs are special drawing rights and a special kind of currency that's only issued by the IMF. And the last time new SDRs were issued was in the global financial crisis.
Yes.
And by issuing SDRs, the IMF has or through its powers of issuing this special currency, the IMF has the ability to increase global liquidity, and an ability that it has to use sparingly if it is to retain the value of these SDRs. And SDRs can be converted into hard currency at the prevailing rates of exchange. So when this issue takes place, all the countries of the world will just have all of the countries of the world will just have additional SDRs according to their shareholding in the fund. And there are many countries that won't use the SDRs, right? Countries who, most of all of the advanced countries are unlikely to use their SDRs, but most emerging markets will. And there's a rate of exchange by which those SDRs can be converted into hard currency, into US dollars. And by drawing down on the US dollar portion of it, those are not loans to be repaid. Those are a part of our quota.
Yes.
But what we'd be required to do if we draw down on it is to pay the interest associated with it. Now, any drawing down of that kind would go directly into our central bank and would have a material impact on reserves and provide an extra layer of cushion for the kind of eventualities that you described. We're expecting that the issue of those SDRs to be formalized in the best information I have by the end of the summer, which, just in time to provide a hedge against, any variances in the winter tourist season along the lines that you're describing.
Thank you, Minister. Al, I'm going to ask you, I think we can unmute you. So please, I'm going to ask our technical people to unmute Al so that he can put his question to the Minister.
Can you hear me?
Yes, Al, we can hear you.
All right, good morning, Dr. Stokes. How do you do? Good morning, Minister.
Hi, morning, Al.
Just a quick question. Minister, there are those who say that perhaps we should spend a larger amount of our GDP in spurring growth and kind of kickstarting recovery, and perhaps reduce the primary surplus from 6. Some point or other of our Caribbean neighbors spending more on recovery than we are. I think we're spending, they said, about 2% or so. What's your take on that, and how do you respond to that?
The first thing I'll say is that, estimates on expenditure based on announcements and not on actually what was actually done, and are riddled with inaccurate comparisons. So I don't want, certainly the ones that have been in the public domain. With respect to the question that you're asking, though, we addressed it at the top of the interview.
Yes.
Which you have missed. I don't know if I want to. We want to kind of take everyone through what I took about 10 minutes to.
Yes.
I mean, that's the moderator's privilege.
No, Minister. But suffice to say, you gave a risk management approach.
But
as a justification. So probably if you could just summarize quickly, another minute.
Yeah. So Al, what we're saying is that we have to devise policy for where we are and what our metrics are. Okay.
Yes. Yes.
The first thing is that there's no way to play around with the primary balance unless you suspend the fiscal rules. That's the first question. So we would have to suspend the fiscal rule for a second year. The second thing is that given the nature of the risk that we face and uncertainty that we face, it's critically important. You can run the simulations with a 1,000 different scenarios. And what you'll find is for a majority of those scenarios, the better thing to do is to get out of this event horizon as quickly as possible, because any little thing can turn where we are now into a full-blown crisis. And I've given the example, what we're going to see in the Caribbean, just as you see this unfold, remember what you've heard me say time and time again. You're going to see several of our Caribbean neighbors have no and I don't want, Al, this is not for quotation, please.
Off the record, Al.
This is off the record, right?
Yes, go ahead.
Let me just generate, you've heard others say an emerging market debt crisis is on the way. Okay?
Yes.
You're going to see that unfold. It's already unfolded in our region.
You made the point with Suriname.
Suriname. Now, Suriname, you're going to find other countries who are either going to have a balance of payments problem or a debt problem. And that is happening right now. And over the next 12 months, you're going to see the dominoes, fall. Now, what I'm saying to you is that we have, from where I sit, having had 2 debt restructurings in the past, in the last decade, 2 in the last decade, we cannot, under any circumstances, afford a third. It would be disastrous.
Yeah.
We would be the new Argentina.
Yeah.
Minister, just a quick follow-up though. Is that a message that you think you should continually reiterate and trumpet, that people can really grasp and understand that?
Well, I depend on everybody here to help in doing so. We are so comfortable with where we are that we don't understand how hot the water is. Okay? Before this crisis began, even though we did had the Herculean achievement of reducing our debt by 50% of GDP, at 94%, we were still the 3rd highest indebted country in the Western Hemisphere out of 35. Okay, 3rd highest indebted out of 35, with the only other 2 who are ahead of us were 2 other island states in the Caribbean. But we traded, in terms of our debt, way above where we were because people understood the seriousness of our intent. And people gave us credit for the future, okay? And everybody in this room is living on that credit, okay? Is living on the institutional credit that Jamaica has received. And this is not a time to give it up, i.e. our interest rates do not reflect our debt levels. And that is why we may be fooled to believing that we are in safe land. But the only reason why our interest rates don't reflect our debt levels is because everybody knows that we're darn serious about what we're doing. And now is not the time to give it up. Now is the time to differentiate ourselves from all these other countries, okay? When that debt crisis emerges, you're gonna have country X, country Y, country Z, country A, country B with the same exact debt level as Jamaica that are collapsing. And what we don't want at that time is for people to mix us up and say, oh my goodness, lump all these countries together, right? They're all basket cases. When that happens, we want to be able to show the institutional changes, the institutional reforms, and get credit for the direction, right? I use a phrase that, in mathematics, vectors are both position and velocity, right? So the position, we may have a debt level of 110, but our direction is radically different from everybody else's. Our direction is unmistakably positive. And we get credit for that. And no, there's no better time to differentiate yourself than in a time of crisis. And that's exactly what we're doing. Now, related to that, Al, is that...
Sorry, Minister, I don't want you to take all the time. I know you have a few more minutes, and I really would love to get a few more questions.
Another question in, but I don't want Al to go and write some incomplete stuff.
No. I think you have been very comprehensive, Al. So I'm just going to ask you, Al.
So Al, the other part of the story is that consumption expenditure is not going to be fiscally accretive in an open economy with 80% openness and with high indebtedness. It just will not. And public investment expenditure, we cannot manufacture it within 12 months. We just don't have the capacity to do that beyond what we're already doing. That $8 billion program that we're doing on infrastructure, which we manufactured because of the crisis, I have to be, we are being down every day to make sure that they design it, that they procure it, that they implement it all within the 12 months. And that alone is going to be a big task. And that's just speaking practically and being honest about the capabilities of the public bureaucracy. Now, I'll just leave you with a few metaphors as well, right? And the metaphors are, you don't count your chickens before you're hatched, okay? So you don't say, hey, let us relax now and then get the growth and then we'll pay for it later, right? In our neck of the woods, it's a very dangerous way of thinking. The second is that if you're using a sailing metaphor, when the wind is going with you, okay, that's the time you tighten your sails because you have the wind, right? So we're going to grow this fiscal year. We are going to grow. The economy is going to expand, and we're going to grow next fiscal year as well. That's going to happen. So we have the wind in our sails. That's the time to make progress on this very important variable, rather than when the wind is flat. When the wind is flat, we want to be in a position to let the sails out. Do you understand what I'm saying? So people have it in reverse to say, hey, in this crisis, why don't we loosen, get the growth, and then we can tighten? No, that's a very risky strategy, because you could loosen and not get any incremental for the reasons that I mentioned, and then you still have the debt, and you're going to tighten when this recovery period is off and you need to kind of go again from a higher level. It's much better to take the sails in when the wind is with you. We're going to grow, even with the sail, right? We're going to grow and we're going to move. And when that wind flattens, i.e. we don't have the boost from a low base, right? Then we're in a position, hopefully we've made enough progress that we can let the sails out. It's a strategy that is is designed for the predicament that we find ourselves in, which is very, very different from the predicament of other countries in our Western Hemisphere region.
Thanks, Minister. Al, thank you. Minister, just trying to get into a couple quick questions into you. And I'm just going to ask, anyone else who on the call, just please use the raise your hand feature so I can just instruct our technical people to unmute so you can get your question in.
I can just take one last question, Adrian. I have to run to another thing.
Okay, Minister. So let me give you one last question then, Minister. So, and it's on the area of the debt, right? 60% of the debt is comprised of foreign currency, right? And I would just like to hear from a debt management perspective, any plans to reduce the FX component of the overall debt?
Yeah, so the long-term strategy is to reduce the FX component. Because of the crisis, we've had to reduce or lengthen the time when that is going to sort of happen. As you can imagine, having foreign currency available in Jamaica is important. However, I will again share that during the last fiscal year, we actually reduced nominal US dollar debt. Right? There's no precedent for that in any other crisis. During a massive crisis that has balance of payments and fiscal, implications, that you actually reduce your US dollar debt. We paid off $150 million to Noble last year, August, and we also engaged in a currency swap with the IDB, where we had US dollar debt to them in a very innovative transaction, and that debt was swapped into Jamaican dollars. And we're hoping that we can do more of those transactions with the IDB over time. So we are making steps to reduce that exposure, but the crisis definitely will have an impact on the pace at which that can happen. But it's all the more reason why these credibility enhancing reforms and policies are critically important. Everyone will remember what we chose to do in this crisis and how we handled it. And that is going to be to our advantage going forward. You've heard me speak about this in the past, that we have to get to the stage where we can issue J dollar debt internationally. Fundamentally, where does our US dollar debt portion come from? It comes from the fact that the volumes of capital that we need to raise to service and repay debt, if we were to raise that all internally, it would have a deleterious effect on J dollar liquidity and J dollar interest rates, and it would be terrible for everybody here. Okay, and that's why you have to raise internationally. But internationally, we can only raise in US dollars.
Yes.
Okay. Now, when people begin to see the seriousness with which we manage our economy, that our central bank is independent, that we are targeting inflation, that we have an open monetary policy committee that discloses its minutes for everybody to see, that the government adheres to a rule, fiscal policy that's anchored on a debt objective long into the future, come hell or high water. We're serious about that. Then we are going to be able to, over the next few years, on the back of that credibility, issue Jamaican dollars internationally. We may start with a small amount, but that ultimately is the key, Adrian. When people can take, and of course, there's a price for it, right? You look at inflation and there's going to be a price for that. But when people see us, right, with the degree of credibility that we need to have, we will be able to borrow internationally in Jamaican dollars. They will come here, they'll sell their US dollars, they'll buy J dollars, and they'll lend the J dollars to the government. That is the only way out. And that is how all countries that don't have a massive foreign component to their debt do it. That is the only way to do it. So I need you to stand with me and stand with the government as we pursue policies that don't only think about today, but they think about tomorrow. And that there are policies that enhance the credibility of Jamaica as an island state in a wide open sea. Because at the end of the day, this is cash flow lending. This is not asset-based lending. There's nobody coming here to take, to mortgage over any building here. Okay, it's all cash flow lending. And as you know, cash flow lending is built on credibility and confidence. And all our policies and our programs are designed to enhance the credibility of Jamaica as a sovereign state, a state you can trust, right? And that is how we'll achieve the objective that you have mentioned.
Thank you, Minister. Listen, Minister, we have Therese Turner-Jones, an important partner I'm sure you're aware of. She just wants to make a comment before you leave. So please, just oblige us. Can you unmute Therese microphone, please? Technical people, quickly, can you yes, I think she's...
Yeah, Adrian, I'm gonna have to go.
Okay. All right, Minister. All right, thank you. Therese, can you Minister, thank you. This is very, very informative session. And, really would like to, thank you for sharing with us today. You have instilled a lot of confidence in your management of the economy. And so we look forward to better things ahead for Jamaica. So really, really thank you.
Thanks a lot. Good to be here.
All right.
Yeah, I just wanted to congratulate the minister. That's it. But also wanted to ask him about technology, right. Which I think is probably the part of the institutional framework that is least developed. And I think all of us can do. I know some of his staff are still on this call. So just to say that's, to me, that's the next level of financial deepening that needs to happen. And with the care packages and the set packages and so on, there was an attempt to go digital. And I wanted to get his views on that. But Stephanie, maybe that's something you can raise with the minister later, and he can get back to the PSOJ on that, because I think in order for Jamaica to really take the best advantage of all the institutional work that's been done that the minister mentioned, the next level is to make all of this on a digital platform so that fewer checks are being issued, there's all this paper being eradicated and so on. That's where we need to go. And it's even more important in the pandemic. But this was great. Thanks a lot, Adrian. Thank you.
Thank you for your comments, and wish we had more time with the minister. We'll follow up and try to get a response and circulate that to the members and to anyone interested. So let me again just thank everybody for participating today. Thank you for joining us. It has been an informative session. We were impacted by time, but nonetheless, I think we got a lot out of the minister, at least very good insights into government's macroeconomic policies. Before I close, I would like to thank Colleen and the PSOJ team for pulling this together. Well organized, so thank you guys for doing everything and getting this important forum for our members. So until next event, I would like to thank everybody, and please be safe. Thank you. Take care.